The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Good evening and welcome to Your Money, Your Call. I'm Chris Kimber. If you've got a question about shares, our phone lines are open right now on 1300 30 34 34 35, or if you prefer, you can email us on yourmoney@skynews.com.au. I've only said that number 4 million times. Welcome to the program. Tonight with me in the studio is Roger Montgomery from Montgomery Investment Management and Ben Clark from TMS Capital. Well, once again, the market has proved over the last week or two, if anything, that cash is not king one more time. Once again, all of our dividend yield stocks are hitting highs yet again. We had Telstra today up at 407, now returning something ridiculous like 70%, including dividends, since the low when we talked about it last year, as being better than cash. Tattersalls still hanging around their highs, a couple of dividends up around in the 280s, 290s. And Commonwealth Bank, I'm not sure if it hit it, but nearly 58 bucks. You're talking about up $13 or $14 and $3 fully franked dividends. You know, just a handful of very, very simple processes over the last 12 months, and you're looking at, 15 years of return on your cash. Probably the biggest issue we're going to have to face now. It's much more difficult if you're coming to the market with a pile of cash. What do? Do you keep chasing the yield just because we've got negative yields in Germany and a lot of Europe? Money's flowing still flying into Australia because they can't get that sort of yield anywhere else. The Aussie dollar, I think, is over 105 today. Last time it peaked out at 110 before the money flowed back out of Australia. Very, very difficult market. Some of the growth stocks started to bounce off the low. Ben, look, we will start with you. It's much tougher to play when you've got such a dichotomy between the two sections of the market. Yeah,
it's amazing. I saw that Caltex closed their subordinated note issue after 2 days. Probably one of the worst terms I've ever seen on one of these notes. The company can stop paying a dividend whenever it chooses to. Some pretty nasty clauses and a 2039 maturity date, and yet they managed to raise that money so easily. And it just goes to show what's going on in the market. Everyone is either chasing yield or chasing safety. That's been the area of the market to be in. We're increasingly coming to the view that it's the area to start skimming some money out of. So we've been this week skimming some Telstra and some Ramsay Healthcare, looking at CSL and looking at CommBank. And we're trying to find the areas of the market that are totally unloved at the moment, because I think, you've got to be aware, like when Telstra was $3, I was ringing up clients telling them to buy it, and we did buy a lot of it. However, a lot didn't want to buy it. At $4, everyone's ringing up saying, should I buy more, should I buy some? And it's just, it's just the way that the psychology of the markets can work. But but there's areas of value out there, and hopefully we'll talk about them tonight. We've got reporting season coming up. I think it's a really important season. Normally you'll find companies that report okay or ahead of forecast will be the stocks that outperform in the next 3 or 4 months, and the ones that disappoint will probably be the underperformers for the next few months. So watching the show for the next few weeks, I think will pay off as we find out, go to all these briefings and speak to management, see how they're tracking. Yeah, do you like that?
Absolutely. Keep watching this for the next couple of weeks.
He's not just good looking.
Not even.
Not even. Now listen, Rog, you've managed to avoid some of the underperforming sections of the market. Some of these growth stocks, you chose not to be, and they've underperformed. What are you doing now? Are you doing much of a mix around with what you're up to?
What's really interesting is the last 3 years in April, if you'd sold out April, May, then you would have avoided a 10 to 20% decline in the market. In the
ASX 200.
Yeah, from April through to June 30. And again this year it was the case. But this time what's happened is that we've found that a decline in the market hasn't resulted in a commensurate lift or a corresponding lift in high quality companies being cheap.
Yeah.
So we can't find many things at all, and I know that's something I'm often saying.
Yeah.
There are a few things, and we'll certainly talk about them tonight. We'll talk about them when we do that 30-second thing, where we're supposed to summarise, everything
One
about
of
a
your
company.
favourites,
And we'll do that. And, we love it. So we'll do that. So there is a little bit of value, but we have been taking profits.
Yes.
In this rally. We've been disappointed by what management have done in some situations. We've met with some managers of companies that we own shares in, and they've told us they're committed to staying with the business and they've left, or they've resigned.
Lovely.
Or we've discovered that there's a clause in a contract that somebody has with a supplier or a joint venture partner, and that clause is not what they told us in a meeting. And so when the actions don't match the words, we've got to sell, irrespective of what the price is.
We definitely won't raise any money.
Yeah.
And then they do that. Sorry, that's my favourite.
But let me say this. I think there are some sectors of the market that are ripe for mergers and acquisitions activity.
Yes.
And I'm hoping that we'll get some questions about that tonight, and we'll talk about that.
If we don't, I'll ask you.
Okay.
We're going to start out with Brian from Brisbane. Thanks for your call, Brian. How can we help you this evening?
Hi, Chris. I'm just ringing, you'd know the share I'm talking about, Atlas Iron.
I know a lot about Atlas Iron, yes.
You do. I bought it back in May at 270 odd, and then rebought it again for about 224.
Yep.
And it's gone down since.
169
what should
today.
I do?